Hello and welcome to another episode of Frugal Finance. This week we're just going to have a quick look at the weekly roundup for the Trading 212 portfolio. So let's just get stuck straight into that. But before we do that, if you could smash the like button and subscribe to the channel, that would do me a real big favour. It helps the channel get out to a wider audience and helps assist people with their knowledge and education on the stock market and so on. Obviously, as I always say, these videos are for educational and entertainment purposes only. I am not a licensed stock advisor or registered with the FCA, so you need to do your own research into these and make your own decisions. If you're confused about that, you need to take some independent advice by a trained person. So with that said, please do hit the like button and subscribe, and let's get stuck in. So this week has actually been quite a reasonable week. So actually we've got an overall return right now of 3.56% on the portfolio, up £64.03. So it's been a sort of relatively kind of steady week, if you like, with the portfolio. I did credit some money midweek, and you'll see before there is an update on the pie. Normally post that around Wednesday, Thursday. Hence why it's called a midweek update, and you'll see that is now in the green for the first time in a little while. So going back to the investments here, so I won't include primarily the ones that are part of the pie, so the smaller shares you see here, because that's like a kind of the pie works in a way, for those who don't know it, where you put money in and it allocates a percentage of the money you put in across a number of shares, so 50 shares in my case. Put £50 in, credits across £1 across each share automatically for you. So that's what a pie is. So outside of the pie, we've got things like Angc Investments. Now this week, it's been a reasonable week for them. They're up 0.31%. As I always say, they're a bit of a stable stock, in the sense that it doesn't fluctuate an awful lot. But what was important to note this month is I hit the target that I was after previously, in that when I got to £160 worth of stock, that equates to around about £1 a month in the dividend, which doesn't sound like an awful lot, but £1 a month is a significant threshold for me. It's just nice, a nice round figure. It's not pence, we're talking pounds now. So the next target obviously would be to get that to £10. Obviously we need about £1,600 in there in order to do that, maybe slightly more. So at the moment we're a little way off of that, so that will be our next goal. But for the meantime, it's going to pay me just over £1 a month, maybe almost as much as £2 a month, because now we've got nearly £400 worth of shares in there. So effectively once every 6 months, if it's paying me £2, that's approximately, in pounds, not in dollars, because it's £11.64 average buying price for me. That is approximately one share once every 6 months. So if we can get to the point where we're getting, roughly speaking, £10-11 a month, then that is going to be a share a month. And then I plan to sort of leave that alone, because it will then be self-fulfilling. So we'll end up with 12 shares every year, which is about another £1 every year. So you can see the compound effect happening there. So moving on from that, American Express, that is up this week 2.73%, so that's quite a good increase there. Overall for me it's up 4.6%. And again, one of the ones that I actually received a dividend for as well. Okay, it's only 26p, but it is 26p for nothing. So what you will see is when I do my review of the Vox Pop Me, the video analysis, survey app that I've been using and trialing for February, you'll see that I, throughout the month, have released money from that, and then I've put it into AGNC, because obviously that's a dividend paying stock, so it's yet more money. So I've earned free money, then I've used that free money to put into the stock market to then earn more free money. So it's again a lovely compounding effect there. And you'll see that some of the exact figures from Vox Pop Me and various other things and the dividends that I've received have gone straight back into AGNC. I don't know if anybody knows what at all. Maybe you could comment in the description below or the comment section below how you can automatically set, say, this 26p to go back into American Express, because obviously at the moment it just goes into my cash account and then I have to sit there and figure it all out. And I'll be honest, the lazy part of me that just wants to dump it all into AGNC to try and get to that target, which obviously isn't a bad thing to do, but it would be nice if the dividends go back straight into the company that they came from. That was my hope. And obviously with the pie, I'm getting an awful lot of 1p, 2p, 3p dividends. So it takes quite a long time for that to add up to a significant amount. So anyway, if you do know how to do that, please do comment below and let me know. Maybe somebody could even do a short video on it if they wanted to. Another one of the various YouTubers who do stocks and various financial matters on their channel. Anyway, so moving on from that, we've got Barrett Homes. Barrett this week are down 4%. I think that's probably because the housing market in the UK is starting to slow down. I noticed myself less and less properties coming onto the market through Rightmove, which is obviously the main hub of things. So the pending cancellation of the stamp duty holiday is obviously going to cause a bit of a dip in the housing market. However, obviously we've got Rishi's budget on the 3rd of March. If that's addressed then this may go back up then. If it doesn't, then I may seek to buy a few more shares in it. But overall, we're up anyway, because obviously I bought before this before this dip here, so we're up 47p, so we're in good standing with them. And then going down the list, obviously you've got Cineworld Group, which obviously, as I've said in the previous videos, has had a bit of a run on it in the last probably month or so, probably to do with the GameStop stuff in America. This big spike here. AGMC were caught up in the GameStop saga, if you like, and they are a cinema group. They own Odeon in the UK, so I said a lot of people probably jumped on the bandwagon and started buying Cineworld Group for the same reason. So, but it's nice to see that's kind of maintained a level. It hasn't kind of crashed down or anything at all, and so for me that's a nice 15% return on that so far. As you'll probably see as I'm scrolling up and down, I've set a few price alerts for these things. So price alerts when they dip down, so here we've got obviously down to 59p, 66p, 61p, all that kind of stuff. But also you'll see I've put a 90p one in there. I feel a bit like if it kind of raged to 90p, I might consider selling it. I haven't done an auto sell, but I just like to know really. And probably like most people, you've got a normal job to do as well. This doesn't earn enough money to replace that, so you can't sit on the app all day long. Easyjet here, part of the normal portfolio. In the last week or so, obviously that's down 7.73, quite significant percentage terms of a loss really, but it's not the end of the world. I think obviously they're having a very hard time, and what I am hopeful is that this price will rebound back up to the sort of £10 mark that it was a year ago, and then I'll probably look to get rid of it, because I don't think EasyJet's overly a stable price in the kind of history of it really, but we shall see. I'll remain dynamic on that one and act as it adjusts and comes along. And then you'll see there are a few now creeping through, so like Netflix, where I've put some money in there, that's up 0.5% in the last week or so, up 4% for me. PepsiCo, I just had some loose change, so I've put that into there in the last week. That's obviously down 5%, so it's obviously fallen a bit. For me, that equates to a 5.29% loss, if you like, but I did put some further money in there, hence why that's a bit higher than it would be otherwise with the pies. Again, I've put some further funds into PIMCO corporate bond as well, because that's down a little bit. To some degree, it's quicker for me to dump the odd £5 and £10 in these to try and dollar cost average them down than it is drip feeding £1 and £2 into them via the pie. So I'm starting to be proactive with the pie and kind of eliminate any of these ones that are, you know, really fallen, or really trying to dollar cost average out of them. It's very easy when you've only put in like £10. If you just go in and whack 50 quid in there, then you pretty much delete your losses at this stage. I did the same thing with Taylor Wimpey earlier in the week. Actually, that's been down and down for some time, and I'm not really too sure why I bought Taylor Wimpey. I feel like I bought them because I'm a bit keen on real estate, and obviously they are a big builder, but having Barrett and Taylor Wimpey is probably not the best of plans. Plus, I've got a lot of American real estate related stocks. So what I did with Taylor Wimpey is they've been on a loss for a long time, is basically pump some money in there, dollar cost average that down to delete the loss essentially, and then I sold all the shares and put them into AGNC. So they've gone back into real estate, but you know, a cycle there. Tesla, you'll see, is down. Not probably got in at the right moment. Maybe a bit of FOMO, not really too sure, but I did only whack in a tenner in there because I had £10 left. Uber has done pretty well as well. In last week, 3.57, and overall nearly just over 13.5%. So that's the kind of portfolio here. Just last one here, Wells Fargo. I believe that is up this week, only slightly, 2.98%. So that's not too bad. And you know, in reality, I only own the one share with them, but overall, a reasonable increase of 10.6. So benefit of hindsight is always a wonderful thing. I wish I'd have put more into Uber and Wells Fargo, but that is life. You can't always do everything and be everywhere at once, but you always have to remember what the overall return is here. I could have put money into Uber and it could have tanked, and they still be in the red at the top here. So that's that. Just quickly nipping over to the invest side of the app where I've got Neo stored. That's kind of gone through peaks and troughs this week. But essentially, we got up to around the 62 around here somewhere. I think it just flashes up 60. It's a bit fiddly with the old finger here, but yeah, just over 62. And that has settled in at 59, which is a small increase for me of 199 on those shares. But what I would say is that's been in the red for quite some time after they kind of peaked before Neo Day, when they've had a release of a new model, then kind of crashed back down a little bit to some degree, down to as low as sort of $53, and then has made a kind of slow increase back up to 60, and I think it'll probably stay there until they do their quarterly earnings report on the 1st of March, so that'll be a big day for Neo. So hopefully that gives you a good insight into the portfolio, and please, as I say before, do not forget to subscribe, hit the like button. Please, it helps the channel get out to a wider audience. And with that said, I shall see you next time.